Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Paulina, are you here? Can you please, can't hear you? Okay, 1 second, let me check. Okay, I am live. Can you guys hear me? Hello? Can you guys hear me? Please confirm. All right, perfect. So, good morning again, and welcome to the very first London Open live stream on Tradin TV, and my first live stream ever. And as a celebration, Funding Pips is generously giving away five 25K challenge accounts for 5 lucky winners. Now, before getting into the giveaway that we'll talk about later on in the live, or anything else, please allow me to introduce myself. This is your host, Saif Qaddoura. I've been in the trading industry, investing and trading industry professionally for the past 10, 11 years now. I have worked in major banks and financial institutions as a floor trader, head of trading, and structured products engineer. During my career, I learned how big financial institutions trade, invest, and even use structured products and derivatives like options, cross-currency swaps, interest rate swaps to hedge risk and make the most of market movements. And today I am thrilled to be hosting this live stream for such a great community of traders like Funding Pips community here on Tradin TV. Now, I have watched some of the live trading sessions hosted on Tradin TV by great traders who, in my opinion, shared great knowledge and setups. Like I've seen a couple of traders that I really liked. A special shout out to Omar. I enjoy watching you trade. You're going places, my friend. So keep up the good work. Anyway, so I hope I'll be as good. So let's start now. But one more thing before we start, just to be clear, this will not be a live trading session. This will be an analysis session for the week, where we're going to break down major pairs and instruments and see what might move the markets, like economic data releases and hot topics. Then we'll analyze those fundamentally, then move to the charts to see where or which instruments have aligning readings between fundamental and technical analysis, so that we can start the trading week, strong and well prepared, both technically and mentally. So let's start. Okay, everyone can hear me, all good. Let's start with the economic calendar. Let's take a look at the economic calendar and see what we have this week. First of all, we have, today, August 11th, we have no major news, no high impact news. So a quiet start, a great time to settle in and prepare for the week. No major moves expected today. Tomorrow, however, I think tomorrow will be a big day in the markets. We have the Reserve Bank of Australia interest rate decision, which is the RBA. You'll hear me say RBA going forward. So the RBA decides its interest rate tomorrow. If they cut rates, borrowing becomes cheaper and vice versa. So if they don't cut, AUD may stay strong. If they cut as expected, there might be a mild drop in the AUD. If they have a bigger cut than expected, then we expect a sharp AUD drop. Now, another news release we have tomorrow is the UK jobs data. It measures how many people are employed. So more jobs means it's good for the pound. So if unemployment comes in lower than expected, GBP goes up. If unemployment comes in higher than expected, then GBP weakens. And if it comes in as expected, we'll see a quiet GBP movement. And then we have the most important one, which is the US CPI numbers. CPI stands for Consumer Price Index, which shows how much prices are rising, like groceries, rent, and so on. So if prices jump, the dollar often strengthens. So a higher than expected reading might mean that the USD will go up or will rally. A lower than expected reading might mean the USD might fall. And if it comes in line with expectations, we might see a quiet USD chart. Now, on Thursday, we have UK GDP, which is the gross domestic product that measures the growth in UK. So UK growth shows business strength. Higher than expected means the GBP gains against the US dollar. A lower than expected reading means currencies or the currency will slide, meaning talking about the GBP. And if it comes in line with the expectations, no big moves will happen. Then we have the PPI, which is now, guys. Does anyone know what inflation is? Does anyone need me to explain what inflation is? Because I'm going to talk about PPI now, which is the Producers Price Index, and first London session. Just please confirm if you know what inflation is. Okay, I'll explain it anyway. So inflation means that your money becomes worth less with time. They use it to measure the what's it called, the economic activity. So it's not always bad. A 2% annual inflation rate is actually healthy. It shows that companies are growing, the economy is growing, they're hiring people. So a 2% inflation rate is actually healthy for the economy. However, it's used. There are two sides to inflation, which is the consumer side, and the CPI shows us that side, which will be tomorrow, the CPI, and we have the producer side, which affects the prices from the producer side, which is the PPI that I was going to tell you that we have it on Thursday. So PPI hints at future inflation. It shows us that how inflation might be in the next months. So PPI is a leading indicator. However, CPI is a lagging indicator, meaning when we see CPI numbers, it shows us what happened on in inflation in the past month. However, when we talk about PPI, it hints on future inflation, okay? So that's one thing. And then we have Japan growth, which is the Japan GDP. It shows us the economic pace in Japan. All the same, if we see higher than expected readings, then the GPY will gain strength, and lower than expected might mean a slide in the JPY. And in line with expectations, we expect no big moves. And by the way, when we say that the JPY will strengthen against the US dollar, it means that the USD JPY pair will drop, because now when JPY goes up, it means that you need more dollars, less dollars to buy JPY. So if, for example, JPY is at 140 now. If it strengthens, it goes to 139. It means that you need less JPY to buy $1. That's how you know that the JPY strengthens. So when I say JPY will strengthen, it doesn't mean that USD JPY will go up. No, it will go down. All right? Is that clear? Okay. Any questions before we... All right. So we also have the OPEC monthly report tomorrow. The OPEC is the oil producing and exporting countries. It's an organization. It includes Saudi Arabia, for example, Russia, and other countries that produce and export oil. They have the monthly report tomorrow and a total of 5 Fed speaker events this week. The Fed is the Federal Reserve. It's the central bank of the US. So we have 5 speakers from the central bank speaking this week, which could shake up the market, especially in a week that is full of inflation data as you saw. We have CPI and we have PPI. So as we saw, the upcoming trading week, which is today till Friday, August 11th till August 15th, is expected to be relatively quiet compared to earnings-heavy periods. We don't have company earnings this week, so it will be kind of calm. But we still have critical US inflation data that could influence Federal Reserve rate cut expectations. So now it's priced in that there will be no change in September. The Federal Reserve will not cut rates. So the probability is 76% of no change in interest rates. So markets are coming off a mixed prior week because we saw the Nasdaq hitting record highs, mainly caused by the tech rallies. For example, you saw Apple stock, but facing possible danger from tariffs because of Donald Trump's adventures, if I can say that. Slowing growth signals and volatility in crypto and equities. So crypto remains volatile, but lifted by regulatory progress like the SEC's Project Crypto and institutional interest. The SEC, by the way, is the regulatory body that controls financial securities in the US. Okay? Okay, so before moving to FX, okay, so no, wait a second. Actually, I think the biggest market mover this week will be something else. It could be the US-China trade deadline, which is tomorrow. Remember when Trump put tariffs or imposed tariffs on China, reciprocal tariffs, and said that they're taxing or they're putting fees on our stuff, our exports, so we'll do the same with their imports. Then they reached, let's say, an agreement that we pause for 90 days. The 90 days end tomorrow. So I think that will be very, very important and significant in terms of market movements tomorrow. So again, the biggest market mover this week will be the US-China trade deadline, which is Tuesday on August 12th. Okay. So if they strike a deal, risky assets jump. Risky assets, we're talking crypto, we're talking the stock market, we're talking stock indices like Dow Jones, the S&P, Nasdaq. If not, money will flow into USD. Okay, the bill is ringing. Now, congratulations. The London session just opened. Anyway, so if they will not strike a deal tomorrow, money will flow into USD, gold, and safe haven assets or currencies like JPY and CHF, for example. Okay, safe haven assets or currencies are mainly assets that people run to in times of uncertainty. Okay, so let's take a look at FX majors. Let's take a look at currencies. So the US dollar, we saw we have inflation. So if inflation turns out to be a bad surprise or to the upside, the dollar often heads higher because higher inflation means a tighter monetary policy from the Fed. Tighter monetary policy means interest rates stay higher for longer, which helps cool down inflation. So if we have high inflation, the central banks raise interest rates to cool down inflation, and vice versa. If we have something called deflation, which is the opposite of inflation, we have low prices. That's not good for economic growth. Central banks start cutting rates to boost the economy or to jumpstart the economy. And then we have, let's talk about the Australian dollar. Australian dollar, we have the interest rate decision. So if the RBA cuts rates, we expect the Aussie to fall because lower rates make the currency less attractive. So if you have AUD and if you have cash AUD and you put it as a deposit in the bank, it will not pay you high interest, so it becomes less attractive. That's why we say if they cut rates, we expect that the Aussie will fall because it becomes less attractive. So GBP and Euro, we also have German CPI. We have UK GDP. I think job numbers or growth figures could move these pairs if we saw any surprises. Otherwise, we'll just have to wait and see. Now let's move to everyone's favorite. Let's move to gold. Okay. Let me see the gold. That's a big drop in gold today. Okay, let's move to gold. Okay, so let's break down this gold tariff drama in super simple terms. Last week, if you noticed, on Friday, there were some big moves on the gold chart, mainly because there were some tariff drama between Trump and Switzerland. So let me explain it to you. I'll keep it straightforward so you can follow along. And if you have any questions, please ask me. Remember, there are no stupid questions. So anything that pops to your mind, please ask me. I will try not to use any economic lingo. So let's see what happened. Now, as I told you on Friday, August 8th, the US government people who handle imports, they are called the Custom and Border Protection, dropped a bombshell. They said certain gold bars coming from Switzerland, which is a big player in the gold world, might get slapped with extra taxes or tariffs, up to 39%. These are like fees on goods brought into the US to make trade fair, let's say, under Trump's rules. So gold bars like the 1 kilogram and the 100-ounce ones were suddenly under pressure with no one has expected that, because gold usually skips this kind of fees. This is a first. It was never the case before, and no one has ever put tariffs on gold. So that was a surprise for the markets. So long story short, gold prices shot up to a crazy record high of over $3,500 an ounce. And we're not talking about the spot, we're talking about the futures. So why did that happen? Because traders worried that it would mess up supply chains. So what is a supply chain? The supply chain is basically the steps that gold go through from the time it gets mined to the time it gets minted and crafted and sold and distributed, and the whole chain. So if that happens, this might mess up this supply chain, which will make price go up, because if demand stayed the same and supply went down, that means that the price will most likely go up because there was some disruption in the supply chain. So like we're expecting that, but let me tell you what happened. Let me tell you what happened so that you can understand the big picture. So some shipments are currently on hold from Switzerland, shipments going from Switzerland to the US. But later that same day, look what happened. The White House jumped in and said, hold up, this was a mix-up. They're putting out an official order to clear it up. So no tariffs on these gold bars after all. So if you remember at around 9 p.m. Dubai time, gold prices dropped suddenly. And it was because the White House put out an official order that we will have to explain it. You misunderstood, or there was some misinformation about the gold tariffs. So prices chilled out and dropped back down, and shipments started flowing again. However, there is one big shipment still on hold from Switzerland. So let's see what will happen today when the US session starts. I think there will be some drama today or this week, if not today. Okay, so what I want you to know about gold is that it's a safe haven asset. So as I told you just now, people run to it when stocks or crypto feel shaky, okay? And this is all part of Trump's push for reciprocal tariffs. Basically, if other countries tax our stuff, as I told you, we tax theirs back. This could hit other markets too, like stocks and mining or export companies. So stuff like this is why you need to watch headlines closely. I know most of you guys are technical analysts or you technical traders, but you need to watch headlines closely because it helps you avoid any unnecessary shakes in the market or any unnecessary drama in the markets. So if tariffs pop up again, gold could rally and we might see new all-time highs, but clarifications can tank it. So let's stay alert and see if anything will happen, especially for those of you who trade gold. Now let's move to major indices like the S&P, Nasdaq, and Dow. Let's look at those fundamentally. So strong U.S. spending or confidence can push stocks higher. Weak data can cause drops, especially in tech or financial sectors. And trade tensions can slow markets or push money into safer sectors like utilities. So earlier now, I was telling you that if they don't strike a deal tomorrow, I'm talking about US and China, if they don't strike a deal tomorrow, most likely this will be very negative for stock markets. People will panic, people will feel uncertainty, so they will take their money out of stocks and stock market and stock indices and move it and park it in gold, silver, JPY, CHF asset. Okay. So now let's move to the fun part, which is the charts. Today we are going to technically analyze the dollar index, euro, GBP, AUD, and JPY, as well as Nasdaq and gold. And before we move to the charts, I'd love to answer any questions if you guys have any. Okay, I have a question here. How do interest rate differentials drive long term? Okay, wait. Where did it go? I lost that question. 1 second. There was a good one. Sorry guys, just let me find the question. Okay, what's your view on gold intraday? We'll talk about that in a minute. Let me just answer any questions you guys have on. 1 second. Oh, come on, I lost it again. How do interest rate differentials drive long-term forex trends, and how sustainable is the carry trade? Keeps jumping. Guys, we need to fix that. the carry trade strategy amid geopolitical risk and market volatility? That's actually a brilliant question. Who's that? Loving nature guy. You should be loving charts, man. 1 second. Okay. Let me copy this question so that I can. I need somewhere to paste it. 1 second. Okay. They do actually drive long-term forex trends because, especially in we're talking forex because. Let me explain what the carry trade is because I don't think everyone knows what the carry trade is. So basically, we have two currencies in each pair, right? So each currency in this pair has different interest rates. All right. So there is something called the interest rate differential, which is the difference between one currency and the other currency in that same pair. So if we're talking USD JPY, for example, the USD interest rate is at 4.5%, for example, while the JPY interest rate is 0.1%. So you have 4.4% interest rate differential. So what do investors do, which is called the carry trade? They basically borrow JPYs, which is the low yielding currency, and then they invest it in and they exchange it for US dollars, which is the higher yielding currency, and then they invest it in, for example, a US bond or a US government bond or any USD driven investment. So they get paid the 4.4% interest rate differential. So it does affect the long-term forex trends because if enough people and institutions start doing that, it means that people will borrow the JPY and exchange it for USD, which means that they're going to sell JPY and buy USD, which will drive an uptrend in USD JPY. And how sustainable is the carry trade strategy amid geopolitical? It's not very sustainable in such times because anything could happen. You saw last year in July or August last year, like 12 months from now, what happened was the carry trade started unwinding and markets dropped, and we saw the USD JPY dropping 10 figures and 10 big figures in 1 week or 3 days, even not a whole week. So all of this was because of geopolitical tension. So it's not very sustainable, but on the long term, yeah, I believe carry trade is one of the most powerful strategies that investors can use. We're not talking traders, investors. Any other questions? I love the question, by the way. Thank you. Considering supply chain disruptions. 1 second, I found another good one. From Switzerland and falling gold price, how do you anticipate these factors will impact inflation expectations and central bank decisions? Okay, now it's the other way around, my friend. Interest rate decisions and central bank decisions will affect inflation, not the other way around. So 1 second, it keeps jumping. I can't. So the supply chain thing is quite different from inflation. So central bank decisions are mainly about monetary policy. Monetary policy means that they need to control inflation and they also need to keep the jobs market strong. So this is the dual mandate of any central bank or the monetary policy. So it's not related to the global trade, so to say. So what's happening between Trump and Switzerland has nothing to do with or not nothing to do, but like it's a bit far from inflation and interest rate decisions and central bank decisions. Okay, so any other questions? Okay. I think it's time to move. Do you think, one second, do you think gold might push down if the US-China trade deal is done tomorrow? Yes, if they strike a deal, the gold prices might drop. We're talking fundamentally, because people will go to riskier assets like US stocks, for example, Europe stocks, and so on. Okay? As a certain person, waving person. Okay. Okay, what's my view on gold as an institutional trader? Gold is my favorite commodity of all time. Gold will keep going up long term. I think sky is the limit. So comparison is very good to find liquid markets. I think we got all of them. I hope I got all of them. Okay, so now let's move to charts. And as always, we start with the dollar index, which is DXY. How do I share the screen? 1 second. Undo DXY, and we share. All right, so here we have the dollar index chart. Let's start with the weekly. The way we think here is that we start with the big picture. We look at the big picture so that we don't make mistakes in analyzing, or we don't want to get any misinformation on the big picture, because in technical analysis there's this principle that says every trend or move is part of its bigger move. So it only makes sense that we go to the bigger or the biggest time frame to analyze and make sure that we understand the big picture. Because if we just take the daily, for example, we will see that price is dropping. Yeah, so we have a downtrend. Cool, let's start selling. But if we look at the weekly, we see that we're approaching a very long-term trend line, which has been intact since 2008. So no, analyzing the big picture and the bigger time frames, and then we drop gradually to lower time frames. My tip to you would be that always start with the chart, even if you're going to trade the 5-minute chart. I know it sounds weird, but that's how it should. That's how it should be. Sorry. Okay. There was some bullish reaction from close to the major trend line. It's still below all moving averages. Different moving averages here. I have the 10 average, I have the 20-day moving average, the 50, the 126-day moving average. Something I created because I saw that it works well for me. So basically, my thought process was that 126 days is half of the trading days in the year. So that should be an interesting one. And it turned out to be actually accurate. So it's below all moving, and I also have the 200 day. It's still under pressure. I don't see it going up anytime soon. Like I'm talking this week. We opened on a gap to the upside this week, but it got rejected really strongly. Let's look at the daily chart. Yeah, so on daily, we have a downtrend, as I told you, but then we broke above this trend, and now we started trending higher. The only way that I can say that it's trending upwards is that I need 3 higher lows and 3 higher highs. Till now, I still don't have 3 high highs. I have 3 higher lows, but I still don't have 3 higher highs. So I'm sticking with the bearish scenario on dollar index until it shows us otherwise. Okay, so let me check the 4 hours. Excuse me 1 second, please. So my audio keeps dropping. Can you guys hear me now? Okay. All right, so the 4 hours shows the same. The 100 level, we're still words, I believe. Now let's move to the inverted dollar index chart, which is the Euro USD, an inverted dollar index chart. Why is that? A fun fact. Now, the dollar index is calculated based on other major currencies like the Euro, JPY, GBP, CHF, I believe AUD. But the higher, it's a weighted average of the value of all of these currencies. So the highest weight goes for euro. I think it's around 60%, if I'm not mistaken. 60% of the dollar index is actually derived from the euro value. So whenever you see dollar index going up, you will see at the very exact time a euro moving down. So let's take a look. Okay, so weekly, we also have a long-term trend line that's been intact for more than 17 years. Yeah. But here we have a break above that trend line and closing above that major trend line, which could mean that euro might continue heading higher going forward, because we broke it, and it's actually not small break. It's a 5% break, and it closed well above that trend line. So I think let's look at daily. Yeah. So the daily also shows that we are still in a one second, please. I am off. What's wrong? So am I still off? Can you guys hear me? Okay, so I'm back. I hope my. Can you hear me? Okay, I'm back now. Is my. Can you hear my voice? Okay. So again, I was talking about euro. I don't know. Did you guys hear the euro analysis or not? Not really. Was I off when I was talking about euro? Okay. Okay. So just to be safe, I'm going to talk about the euro one more time for those of you who missed it, because I had some technical issues. So I was saying that the euro has been in a downtrending move since 2008, which is 17 years, and that's a major downtrend line. I was saying that it broke above that trend line, and this is a major break because it's 5% break, which is 5% of the price of euro, which is a big break. That's why I believe that it might keep going higher and higher, but it needs to break above 1.233 to confirm the trend reversal, which is the 17-year-old downtrend. Okay. Now, if we go to the daily, we will see that it's still above most of the major moving averages. It's still in an uptrend. It reacts pretty well from lows. It gets rejected pretty well. So as long as we're in an uptrend, I believe we're still going up. And we'll keep going up as long as the chart shows us otherwise. All right, so now let's move to the GBP, and we start with the weekly chart. Let's see how it closed last week. Oh, that's actually impressive. It closed pretty well last week. That's an engulfing candle above most of the moving averages. So what I would do, I'd wait a correction at around 133.50, and I'll buy with stops below 132.40, and I'll be targeting the highs, which is 1.37. Anyway, that's for the weekly. Let's take a look at daily. How does it look on daily? It's very similar to what's happening in other currencies, especially the dollar index. Dollar index broke above, GBP broke below. So, in order for it to be or to continue going up, it needs to break above the 1.30. 1 second. No, that makes. Okay, yeah. It needs to break above 136 to confirm the upward movement. So what I was saying that I would buy on or at 1.3350 with stops below this low, and I would add to my position as I go and break above 1.36. So yeah, it's still above the major moving averages, and as you can see, this blue one is the 126-day moving average that I have invented. It actually works pretty well. So I recommend that you guys give it a try. Okay, then we have JPY. Let's move to JPY. Do we have any JPY traders here? Ah, it's not shared. I'm sorry. One second. I apologize the first time doing so. I might miss a thing or two. So I'll go through GBP really quickly again. So that was the engulfing candle that I was telling you about. Look something like this. Okay, and targeting the highs. So it's a 1 to 2.5 swing trade. Not bad, but not my anything above 1 to 3, because that gives you room to be wrong more times. Higher risk reward is actually more comfortable for you to trade, because it gives you room to be wrong, and it's absolutely fine to be wrong most of the time, as long as you have a proper risk reward ratio. And this is the blue moving average, which is the 126-day moving average. It's a simple moving average, by the way. I was showing you how it reacted from that level. So I would you guys giving this moving average a try. Anyway, let's move now to JPY, USD JPY. We have the weekly. Okay, so it's still holding up above this major level, which is 141. It reacted pretty aggressively from that and reached 150. So we might be looking at a slightly big uptrend. If you can see, we have higher highs and higher lows. Would mean that USD JPY might be going up. What could that mean to USD, which is the dollar index? It might mean that the dollar index might actually reverse upwards, but we'll still need to watch and see. But for now, it's still under pressure, because if you see this, it closed below the 50-day moving average, and it's stuck somehow between the 50-day moving average and the 126 days moving average. So it's kind of ranging, but I wouldn't trade USD JPY in this period, because it's not very clear. Then let's see the AUD. Okay. The AUD, okay. We have a major downtrend. Also, take a look at this. It's been in a downtrend forever, guys. And I saw something here. AUD USD is the trend line, and it made an engulfing candle, a very strong engulfing candle. With a good trade would be entering here. And guys, I'm a swing trader, so you will have to be patient for this. This is a risk reward ratio that I'd be interested in, to 5. I'll enter the stops here and I'll target the lows. But again, that's why we have a stop loss. We're not sure. It might happen, it might not happen. But I like the setup overall. Okay. Let's take a look at the daily. Yeah, now still above the two most important moving averages, which is the 126 moving days moving average and 200 days moving average. So it's still above those. I'd be more comfortable with my trade after it's below the 0.634. Okay, so this level is very important to confirm that my trade is correct. Entering here would be a little bit risky, because we're still those levels or those moving averages. But once we close 2 days below those, I think it could be a great confirmation that we're still going or heading to these lows. Okay. Now let's finish big with gold. Let's take a look at gold. What's happening here? So it's been an uptrend for the past 7 years now. I remember I started trading gold actively back in 2018. I traded gold before that, but I started trading it actively in 2018. And I remember the first price I entered on gold was $1,160 per ounce. So looking at today's numbers, that's like triple the price. So that's how strong the uptrend has been. Okay, so if we look at the weekly, that's pretty obvious. It's still above all moving averages. It's very sharp. It's very steep. So I wouldn't want to sell that, but I'd definitely buy if it drops sharply to, let's say, $3,000 per ounce. I don't think this will happen soon, but let's watch. We cannot say never in financial markets. Okay, so let me tell you what I think on the daily chart. Okay, now on the daily chart, we have a symmetrical triangle, which can also be read as an Elliott triangle, A, B, C, D, E. That means that the uptrend will likely continue. That's a continuation pattern. So the way I look at it is that E must not break below C. So we enter here with stops below C and targeting $3,600 per ounce. How did I decide that 3,600 is my target? I just use Fibonacci extensions to see that my first target would be at 1.272 level, which is $3,600. That's how I thought about it, and I'm actually in that trade right now. And whenever I get the chance, I will be adding to this trade. But that doesn't mean that it wouldn't go back to 3,310. That's still a possibility. It might retest the uptrend line. So be careful while trading gold. It might be, especially this week and after what I told you about the US-Switzerland drama on tariffs. So please be responsible, trade responsibly, and whatever you need, you know where to find me. I was very happy to host this live stream. Thank you very much, guys. You've been amazing, and I hope this was helpful. See you on the next one.